So those who have been following me for long, from I started last 2 years or so, it's the same one particular thing that I've been doing. But these beginners, the moment they experience one or two losses, then they will flip to another mentor and they will just trying to figure out what is going on at the other side. That shouldn't be your case. You need to refine your system and keep on doing one particular thing. So trading comprises of your strategy, your risk management, and your mindset. So the mindset should be what? In the form of understanding the probability nature of what? Trading. Okay, so my brother, if you strongly believe that you know what you are doing, go for Prof. Try your skill over there. If you pass, you can make a lot of money from Prof. If you strongly believe, I know people who have made a lot, millions of dollars from Prof. So they are not scammers. They are there to help you. Okay, and at the same time, they are into business too. That's what you need to understand. But it's not easy though. That's what you need to understand about it. It's not easy. All right. Yeah. So someone was also asking this question. He sent it in the chat. Let me read it out. So hi there, say. How can I use Fibonacci retracement to trade the Forex market? How to spot 100%? So I used to be using Fibonacci, but I've stopped using it. Yeah, so Fibonacci is like trying to catch the reversal of a trend. Okay, so this is how Fibonacci works. You get it? This is how Fibonacci works. So maybe in the forex market, I mostly say the faces in the forex market are the forex market is in. Please, Lizzie, stop writing on the screen. Other than that, I will just remove you, Elizabeth. Yeah, so the forex, when it comes to trading or when it comes to how the market moves, the market is in what? Three phases. Okay, so uptrend phase, downtrend phase, and sometimes consolidating. You get it? But so this is how it moves. When it comes to the uptrend phase, you see more of what the market will be doing: higher highs and higher lows, higher highs and higher lows. So those who have tasted this thing, my training, I mostly say if the market is in an uptrend, doesn't mean what you are not going to be experiencing, you are not going to be seeing some downtrend moves. Okay, if in overall who is in dominating this market is what? Buyers who are dominating the market. But at certain point, you can be seeing some temporal what domination by sellers to coming into the market trying to what to rock their shoulders, but it is short term. You get it? So this is how it mostly moves. So uptrend when it is making more of what the high swing highs and swing low, swing high, swing low, swing high. So this is what impulsive move. Impulsive move simply means when the market is in what in the direction of what the trend. So the trend at this in this case is what an uptrend, and we have what corrective phase. So the corrective phase is sometimes what the pullbacks, the reversals, the correction, the retracement. You get it? So I mostly don't recommend you trade the correction, but if you are experienced, you can be going for what correction. And when it comes to the correction too, it depends on the time frame you are trading. You get it? Correction at daily time frame can be an impulsive move at what H4 time frame. So you need to be first. We used to be what condemning other people's system. Oh, you are trading against the trend and those things. But when I grew into this game, I noticed that there was nothing like trading against the trend. Okay, it depends. You are going to be trading. I can call you out that you are trading against the trend only when I know the time frame you are trading. You get it? Because an correction at H1, a correction at the daily time frame can be an impulsive move at the H1 time frame. So there was nothing like correction in my set. It only comes when what I get to know the time frame you are trading. So this is the impulsive move, which means what you are trading with a trend. You have corrective move, which is what against the main trend. Impulsive with the trend correction. So basically, when it comes to the uptrend market, this is how the market moves. And when it comes to the downtrend market, we mostly see swings lows, which is lower low. People use what we used to know is what lower lows and lower highs, lower lows and lower highs. Yeah. So when it comes to retracement, using Fibonacci, this is how it goes. So Fibonacci retracement simply means how this move is correcting this impulsive move. So the whole of this point is what the whole of this point, the whole of from here is what the high of the move, which is the impulsive move, which is the move impulsive you call it high, or the tip of the what the move, or the tip of the move. And we have this one to be what we have this one to be the dip, which is what the low of the impulsive move. So when it comes to correction, or when it comes to correct please a moment. Yeah, so this is the dip, this is the tip. You get it? So when it is correcting or when it is retracing, so all this area is 100%, okay? All this area is 100%. So when it comes to the retracement, it can be it's starting retracing from here. So this one can be maybe 10% of the retracement, 30% of the retracement, 50% of the retracement, 100% of the retracement. So that's what it means by Fibonacci retracement, trying to correct the whole of this move, the correction, trying to correct what? The whole of this move. But when it comes to the levels, you get it. Before you be able to know you are going to use Fibonacci to trade, you need to seek for confirmation. So the confirmation can be either what? Using candlestick or using market structure. So this is how we apply the Fibonacci. So you start from the low to the high and where it started. So from here to here, okay, you get it from here to here. So this is where the retracement started, or this is where the corrective move started. So it started from here. So all these levels are what? All these levels are support and resistance levels. You get it? But I don't use them anymore because I have a way of identifying my support and resistances. So I don't use them anymore. So if you are trying to trade the impulsive move, you are trying to say if you want to trade this impulsive move, you are only going to trade them on these levels. Okay, so with regards to your question that you asked, that can you trade 60% or those things, so let's say maybe if you strongly believe that price has gotten to 61.8 Fibonacci level, and you know that price is going to continue the impulsive move, you don't have to just take a buy because price has gotten to this Fibonacci level. You need to seek for confirmation. The confirmation can be what? A candlestick or what? Market structure. Okay, so the one mistake that you would do is trying to take using maybe buy limit. With the moment price touch this level, then you just execute. With that, you are going to lose a lot. Okay, there's no guarantee that anytime price will get to these levels, it is going to continue moving up. So the most important thing is what? You need to wait for confirmation. So that's when you get to what? Know your entry. So me, for instance, what I take into consideration when I'm trying to what? Take an entry is what? The time of the day. I check the time of the day. You get it. So when price gets to this side, I will check the time of the day. And at the same time, I will check the candle. Okay, has the candle closed in my favor? So if I want to take a buy, I have to see that maybe there was a bullish candle on this level. So this level, as I said, it's the same as what? Support and resistance level. So I have to wait for candle confirmation. So if a candle close in my favor, which is what I want to take a buy, then I have to see what? I have to confirm it with a bullish candle. Okay, and at the same time, you need to wait for a market structure. So what it simply means is what? Sometimes if you move to the lower time frame, maybe price will be in a downtrend. Okay, price will be in a downtrend, maybe doing something like this. Okay, so that downtrend mostly comprises of what? Lower lows and lower highs. So you need to wait for a shift in trend, which is going to be what? In your favor. Okay, so a shift in trend like this before you take an entry. You get it? So these are the entry confirmation. You wait for candle, or you wait for what? A shift in trend. Okay, you wait for a shift in trend before you take an entry. So you don't just take an entry when price gets to this level. These levels are, as I said, they are based support and resistance level. By the way, I identify what I do is what I trade correction. When I trade pullbacks, okay, when price pull back, then I take the continuation. But I don't use Fibonacci to determine that. I determine that by what my time frame, my focus time frame is telling me. So this one, for instance, as price has broken this one, when markets open, USD CHF, people can monitor. I'm expecting what? A sell. So maybe these are the levels that I'll be waiting for a confirmation before what I'll take an entry. So I don't use any. There was no need for me to use Fibonacci because already everything is being what, being what displayed on the chart. I don't have to be using Fibonacci. I used to be using Fibonacci's, but Fibonacci's are what, basically support and resistance level. So when you come to the market, a live market for instance, how to determine your Fibonacci? So let's see where this market exactly retrace on what, which level, which Fibonacci level did this market retrace on. So you pull up your what, Fibonacci tool, you start from the highs and lows. Okay, so this is the low, because it is what, a downtrend. This is where you're expecting the retracement. So these are the various retracements levels. So you notice that this one retrace on what, 61.8 Fibonacci level. We use the body of the candle, not the wicks. Okay, so you see it's retraced on this Fibonacci level. But as I'm saying, you don't just say because price has gotten to this level, you are just going to take. You have to wait for confirmation. So one confirmation can be, you see this candle has closed on what, has given you a what do you call it, has given you a bearish candle. Okay, so this is one confirmation. Or you can go to the lower time frame, maybe H1 time frame, and see what the trend is doing. So you notice that this trend is what, an uptrend. So there was a shift in trend over here. You get it? So this is where you can also what, go in for what, you wait for a pullback, then you take the continuation of the trend. So there are a lot of things that I take into consideration when I'm taking an entry. You get it? When I'm taking an entry. So it's the same thing that I've been using. So last week, for instance, we had back to back. So this was the sell that I caught on what, USD CHF, and at the same time on Monday or Tuesday too, I caught what, gold USD. It's the same principle. I've not changed anything. Okay, I caught gold USD over here, sell too, I caught it over here. And Friday too, there was GBP card. I even told those in my membership mentorship group that I'm expecting a buy, and it's played out perfectly. You get it? So it's the same thing that I've been using. Yeah. So with your question, thank you. So this is how you can be trading with what, the various Fibonacci level. Please, what to know explanation for time frames. So time frames are basically time frames. When it talks about time frames, there are period in which a candle is formed. Okay, period in which a candle is formed. For if you take the age for it, if you take the various time frame, let's say the monthly time frame. For every month, a candle is formed. So candlestick very basically candlesticks are just an accumulation of prices. Okay, so if you have tasted my training before, a moment. Yeah, so someone asked, okay, so when it talks about time frames are what, accumulation of prices. So when it comes to the forex market, what you are trying to do, as I explained earlier, you are trying to trade the what, the you are trying to trade the exchange rate. So exchange rate simply comparing the price value of two currencies, two country currencies. You are trying to trade the prices of these country currencies. Okay, so the valuation of these country currencies. So when it comes to the exchange rate moves rapidly. Every second it changes, every second it changes. So the changes in this exchange rate is what you are trying to trade. Okay, so when it comes to the time frame, they are just an accumulation of the prices that comes in, but with different. Please stop writing on the screen. If I see you, I will just remove you. So you are trying to trade the prices that comes in. Okay, so when it takes the time, the monthly time frame, like the changes in price when it comes to within the month. Okay, the changes or the prices that came in within the month. When you take the weekly time frame, the prices that changes within the month. When it takes the daily time frame, the prices that changes within what, the day, the H4 time frame, the price that changes, the price that came in within what, the 4 hour time frame. So time frames are basically the times that, or the duration in which a candle is formed. Okay, so taking 4 hour for instance, for every 4 hour one candle is being printed. And one thing you have to know is what, these candlesticks are just an accumulation of prices, an accumulation of prices. Okay. So for every 4 hour, a candle is formed. For every 4 hour, a candle is formed. For every 4 hour, a candle is formed. So if you want to know more, then you need to be joining the training, because with that one I explain it further, and you can also ask more questions to with regards to that. So I think with this one will help you. So time frame, you have to understand that the duration or the period in which, or the times in which what do you call, candles are formed. So we are following, say, but the voice is not stable. Really? Please, are you people hearing me?
Yes.
Yeah, someone was saying it's not stable. So someone is also saying, "Hi, boss, help me to clarify more about how to identify inducements in the market structure once you have identified the point of it." What is inducement? I don't understand inducement. Yeah, so one mistake a lot of people mostly do is what they think when it comes to trading, we are all doing the same thing. Please, in trading, we are doing every trader is doing different thing. Okay, it is going to be based on the person who teaches you, or your exposure, where you got your exposure from. In trading, you don't do the same thing. So if I don't understand this thing, doesn't mean I don't know what I'm doing. Everyone sees the market differently. I've always been saying this thing. Okay, so sometimes the market that I'm seeing a sell, someone might be seeing a buy, but at the end of the day, what is going to prove us wrong is what the market is going to prove. The market is what is going to the market is going to determine who is right or who is wrong. So we don't do the same thing. So I don't understand the inducement you're talking. I don't use it, so I don't understand.
Please, we can't hear you. If you are still talking, we can't hear you. So please check your audio.
Yeah, so as I'm saying, when it comes to this other blocks and breaker block, and please, I don't use it, so I don't understand. So please, you throw more light on action-based strategy. So please, you throw more light. So as I'm saying, when it comes to the market, everyone does things differently. So me, what I use, what is working for me, I don't use these things that you people are talking about. So please, throw more. I don't use action-based strategy. I don't understand. Please, can you? So please, if you have any question, please, I'm listening. So enough of the this thing. Any question?
Yeah, good evening.
Good evening, sir.
I'm Kofi Apia. I'm speaking from Achimota.
Yeah.
Please, how can I join your mentorship group?
Yeah, so we are going to be having July training too. Okay. So July 15th, we are going to be having July training. So I'll send the link out. So when the time is due, then I'll give you how you'll be able to register too as well. So just stay in tune. I'll be updating you people about it.
Yeah, thank you.
So you see one thing what I'm doing for you people, no one is going to be doing this thing, because one thing from my observation, one thing I noticed, trading is not about someone handing you course. So that's why I don't do like course. Okay. Trading is practical. I need someone to be teaching, someone who is going to be before you, explaining things to you every day. You get it? So that's why I even introduced the YouTube live and those. Trading is not about someone handing course to you. So don't get it wrong. That's so the training, if you have not been taking advantage of the training, you are just like you don't need the skill. Buying a course is not going to help you in trading. You get someone handing over a video to you is not going to be helping you. You need someone to explain things to you. You need someone to be with you every day. Okay, that's the best way to understand. Because when it comes to video explanation, with that one, it's one instance the person is trying to explain.
We can't hear you, sir.
Yeah. So as I'm saying, trading is different. Okay, so someone handing a course to you is not going to do you good. You need someone who is going to be before you every day explaining things to you. That's the best way to go, but that's the simplest way to understand. You get it? So that's why I decided to introduce this training so that it mostly takes a lot of my time, but for the love of the game, explaining things to you people. And those who have been joining my training, those people have been catching up early as compared to when I started. It took me like 5 years before I figured these things out, watching videos there, here. But people who have joined my training are getting it like within less than a year. People they've started seeing results. Okay, they can analyze it by themselves. You get it. So if you are not taking advantage of the training, then you don't need a skill. Yeah. So I hope you are part of my groups, the WhatsApp groups and the Telegram channel too as well. Hello. Yeah, the person who asked the question. Yeah. Any question again? Any question?
Yes, hello,
Yes, sir.
boss. Good evening.
Good evening, sir.
Thank you for this time.
You're welcome.
I want you to kindly explain what scalping and then swing trading means. I came across it today and I was like, it's something new to me.
Yeah, so when it comes to scalping, it's they are all the same strategy. So someone will be saying, when I'm scalping, should I use different strategy? Scalping is just using maybe a smaller time frame to try to what using your applying your system or your strategy on smaller time frame. You get
Okay.
it. So scalping mostly you don't be in the trade for long. It's just a short moment and you are out from the market, targeting some small moves in the market, then you are out of the market. But when it comes to swing trading like sometimes you focus on the higher time frames, and when it comes to the higher time frame, things takes time for it to form, especially if you are trading the daily time frame or the 4 hour time frame. Sometimes you can go on weeks and you've not gotten a trade because with those time frames things takes time. Imagine 4 hour, for every 4 hour one candle is going to form and you trade patterns, you get it, and the candlesticks forms the patterns. So waiting for this long period for this pattern to form, sometimes it can just go beyond a week. Sorry, it can go beyond a week before you get what as an entry to take. But when it comes to scalping, you are focusing on the shorter time frame, like 15 minutes, 5 minutes, and you see 5 minutes a candle is forming. So your patterns are going to be forming very fast. They are going to be forming very quick. So you can easily, sometimes within a day, you can get like 15 trades. I was having someone who used to be I don't know whether the person is here. Within a week, he can take like 40 trade within a week.
Hmm.
So that person is a scalper. He focuses sometimes 1 minute time
Okay.
frame. You get it. So with that
Okay.
time frames, the 1 minute, the 15 minute, the 30 minute, things fast the patterns or the structures form very fast. But when it comes to the higher time frame, things takes time, and it is very important. The difference is why some people focus on the scalping, some people focus on what the swing, because they believe that what when it comes to the higher time frame, and it is very true with the higher time frame, the structures or the patterns are more accurate. It gives you your like asking it gives you more accuracy as compared to the lower time frame. With the lower time frame, there are a lot of fake outs because of the nature of what the time frame, because of the time frame you are focusing on. Things form very fast and it is easily for you to get fake out as compared to the higher time frames. With the higher time frame, things takes time for it to form and you don't easily get faked out. You get it. So if you are starting out and if you want to get consistency, because as a beginner, the moment you start losing discouragement, you start losing interest in the game. So if you are starting out as a beginner, for you to be in the game for a very long time, I will advise everyone to what start with a higher time frame. Be patient with Learn how to be patient. Okay, so start with a higher time frame, getting the accuracy. But most beginners want to make money very quick, very fast, and they will end up doing the lower time frame because they feel like in trading they have to be executing, be taking actions every day. So they prefer using the lower time frames, and they will end up losing a lot, losing money, donating money to the brokers, donating money to the brokers they don't understand. The reason why you are losing is because you focus on the lower time frames. And if you are not
Okay.
experienced on how to be taking profit very quick, because on the lower time frame you need to be very quick in profit taking. And if you are not quick in profit taking, you are going to be losing as compared to the higher time frame. So if you are starting out as a beginner, learn how to use the higher time frame. If you master your system, if you master your strategy, then you can transition to the lower time frame. You practice over there. But I always for recommend you go for what the higher time frame.
Okay. Thank you very. What about, is it the same thing as day trading, or day
Day
trading
trading
is
mean
basically the
it's so with the type of traders, with the type of trading, it all depends on the time frames. You get with the day trading, when it comes to the day trading, you don't hold trade overnight.
okay, okay.
You don't hold trade within a day. So me, for instance, I don't hold trade overnight because of some reason. I don't hold trades overnight. Some of the reasons are because of the swap, and when the market is rolling over as you move into another session, sometimes
Mm,
the what do you call it, the slippage, okay, the slippage
mm.
price, you can be stopped out easily. So I prefer taking profit very quick, and I don't want to be sleeping whilst I'm thinking of how far my trade is. I remember some time
True.
ago I used to be holding trades overnight, and when I wake up early morning, I even take it into dream. When I wake up early morning, the first thing I have to watch, I don't want to be doing that. So I prefer doing day trading. When I'm done, then I'm done. I don't think about trading again because this game can be very stressful.
Okay. All right. Thank you very much, boss.
You're welcome.
Thank you. We are
Yeah, any
looking
question?
forward for the July training.
You're welcome. Yeah, so those who are here, you'll be having training July. I'll be having July training too. So if you are interested, you plan about it. It's going to be 15th of July. You are going to be starting it. So you prepare towards it so that it won't be late when the notice come out and you'll be saying, "Oh, I didn't prepare." You have some time for you to prepare, like 2 weeks now to prepare. So if you want to join the upcoming July training too, so start preparing towards that.
Okay, so how do we prepare? I mean, is there a
As in
fee
your
or anything?
finances, the way the preparation is your finances.
Okay,
Yeah.
all right.
Mm.
Can
Okay.
you throw some more insight on that?
More insight as in what do you
On
mean?
the finances?
Okay, so it's going to be 800. So if I Ghanaian 800 cedis.
But I know that until you have.
Sorry? Hello,
Hello,
please.
engineer.
Yes, sir.
Okay. Good evening, sir.
Good evening.
All right, please. I would like to know. When I came in, you were already talking about the prop firm.
Yeah,
Uh, yeah. Do you have one that after the course
I
we can
recommend.
take? Because probably some some people might not have money to start trading outright, so maybe they'll have to join the firm for a while. So I don't know if you have the ones that you recommend, or you.
Yeah,
I mean,
so personally, I use funding pips. So you can go for funding pip, funded nest, FTMO, but I use funding pips. That's where I've gotten my payout from.
okay. So which is connected to your company that
No,
after the
no,
training.
please. I'm also a trader there. So
Okay, okay.
the most important thing is
Mm.
Come again, sir. Hello.
hello. Yeah, I'm listening. So as I'm saying,
Oh,
the most important thing is you just understand your system or your strategy. When it comes to any those pro firms are there, like they are not going to take away, even though we have people who will come and go, but go for the ones that have been in the system for long. Don't go for the ones that just came in. Because passing an account is not easy. And later they will
yes.
go. Yeah. So
Yeah,
if you want
that is.
Hello?
the one which has been in the game for a very long time, then you can go for FTMO. But FTMO is expensive.
Mm,
For them, they've been in the system for like they started 2020, so
oh, okay, okay.
but it's expensive.
Mm, and
Yeah.
also, you have to be trading every day to
Be
pass the
trading.
challenge. You have to be trading every day. Not like you can trade whenever you want in your own time if you are using your own money.
Nah, you don't have to be trading every day. Everyone.
No, with the prop firm, I'm asking.
No, you don't have to. So it's the same thing as using your personal account, but with that one, okay. So someone has corrected me. Prof. FTMO started 2016. Okay, yes,
Okay,
but but they became popular. I heard of them 2020. Yeah, so someone
okay.
has said they've been in the system for long. So yeah, yeah. So wait, it's the same thing as, but they have some rules that you have to just respect or go by. But it's the same thing
Mm,
as in trading. Sometimes you can go a week if you don't trade them, no one cares. But the most important, some of the rules is maybe if you can't just take one trade, maybe then you say you need to trade it for some maybe three. I think the rules is 3 trading days or so before. But you can read some of their rules. But you don't have to be trading every day. That's not how the rule says. You don't have to be trading unless your system presents an opportunity. Your strategy presents an opportunity before you take it. If your system or strategy hasn't presented an opportunity, no one has pulled a gun on you to trade. You get it?
yeah.
That's not how
Yeah.
it works. So that's
Okay.
not.
One last one. Please, uh, assuming I'm supposed to buy a prop firm for $1,000, and then what if I decide to use that $1,000 to trade my own account? Can you help us with the difference?
Yeah, so one thing about the prop firm is what it gives you leverage. So what I'm trying
Mm,
to mean is what with small accounts, with small amounts of money, you can get a bigger account size. You get it. So let's say maybe if we're having like finding people, for instance, if we're having like $30, you
mm-hmm.
can be getting the leverage of controlling $5,000 accounts. That is the leverage. So when it
Okay.
comes to 50,000 accounts, you can get it like $240 or so. You get it, getting 50,000. And if you have gone through all the process, passed all the challenges, and you are managing 50, it's the same thing as managing your personal account. That's the
Okay.
leverage. But so the most important thing is you being able to pass the account. So Profirm and your personal account, the difference is Profirm gives you leverage. So it's
Mm-hmm.
like how XM has been doing. If you deposit, they give you times two of your deposit. That's leverage. You get even if
Okay.
you lose your personal account, you can recover through using the leverage or the bonus that they've given to you. So it's the same thing in prop. With prop firm, they are giving you leverage. For some people that are not having the means of holding bigger account, they're having the skill, but they don't
Mm,
have the funds, they don't have the means, especially we that you are living in Africa. Getting $1,000, you can sometimes work the whole year and you will not get that $1,000. But
yeah.
with the help
Yeah.
of prop firm, you can use smaller amounts of money, and with your skill you'll be able to get huge amounts of money to control. So that's the difference between the prop and what your personal account. But with your personal account, the disadvantage with using prop firm and using prop firm is what it comes with a lot of conditions, that a lot of rules, condition you need to what obey. You get it, which sometimes make it very challenging. You don't have to be trading when news is approaching. But with your own account, there's no rules. You can decide to trade when a news is being released. You can just hold trade overnight. Some of the prop firm, you can't be holding trade overnight. A lot of rules. So that's the disadvantage. But I think me, for instance, prop firm is good because it mostly helps you to be very disciplined as compared to your own account, because those rules helps you, especially when it comes to over leveraging, or yeah, when it comes to over trading. With your personal account there was no rules, but with Profirm, when you
Mm,
reach the daily threshold, like when you reach the daily limit 5%, the moment you trade beyond 5%, if you are in drawdown beyond 5% on a day, your account is going to be breached. You are going to breach your account. Okay, you are
yeah.
going to lose your account. But with your personal accounts you can trade and sometimes you end up losing. So that's a disadvantage. So Profirm, it helps you to be very disciplined as a trader. But before you
Okay.
go in for prop firm, my advice is what? Know what you are doing. Know your system. Have a strategy. Know that. So me when I went in for prop firm at my initial stage, I was trading demo. So I was also trading my personal account. I noticed that I can grow my personal account, not like growing it exponentially, as some people will be saying. I grew $100 to maybe $100,000. That is not trading. You get it. If you have been able to grow $100,000 to 100, that is not trading. You can't do it consistently with time, and sometimes to those people do it several times before they will get to that amount of money that they are holding. You get it. But when it comes to proper trading, that's when you apply risk management. You are very, very hot, calculative when it comes to taking trades. You don't over leverage your risks. You keep your risks constant. You keep it at flow. But when it comes to those over leveraging and those things, that is not trading, and it is being done by those who can easily fund their account. If you can't fund your account, make sure you are having rules. You are obeying, like you are having rules guiding you. Those people that usually fund the account try to flip it, they can easily fund your account. They can easily fund the account. They have the means. So if you also believe that you have the means, you can fund $100 and decide to trade it within one trading day. That's fine. That's up to you. But if you don't have the means, try to make sure you are trading the right way. Apply risk management, apply money management when you're trading. That is how you grow. That is the proper way. That is the best way to what learn the skill. Not trying to grow accounts exponentially and those things. You can't do it consistently with those kind of flipping and those things. If you do one or two, three times, you blow the account. But if you apply risk management, you can trade for a very long time and you are still not going to be blowing the account. You get it. You are still not going to be blowing out because the goal for the game is not for us to, yeah, for us to be out, to go in, what do you call it? It's not for us to be out of the game, for us to be in the game. You get it. So when it comes to this football, for instance, some teams, their goal is not to take the cup. Their goal too is not to go for relegation. Their goal is to be in the league. As a trader, that should be your goal. Your goal is not to blow your account. The goal is to what? Not to make money. Your goal is to be in your, keep your account. And the moment you have this mindset, you are automatically going to make money. You get it. Your goal, if you come into trading, your goal is not to make money. Your goal is to what? Go by your rules. Your goal is to respect your rules. Your goal is to be like not to blow your account. Not so with that, you apply risk management. You have to make sure what your system has presented an opportunity before you trade. With that one, you don't blow your account easily. You don't blow your account, you will still be in the game because you are applying risk management. By the moment you make up your mind that today I have to make this amount of money, that is when the greed comes in. That is when you start being annoyed with yourself. Then you start taking trades that doesn't align with your system or your strategy. You get it. So that should be your goal. Your goal shouldn't be making money. Your goal shouldn't be blowing your account. It should be in between. And I'm betting you, when you have this mindset, money is going to come naturally because you are going to be disciplined. You don't care if this week you make money or you don't make money. And I bet you are going to be making money automatically. You get it. So when I started out, let me give you this example. When I started out, when I was very ambitious, so I used to listen to people who are successful. Okay, one thing I learned from successful people when I was very young is what? Try to follow the process. Don't think about the destination. And I kind of experienced this thing when I used to, those times I used to be going for jogging. When you are going for jogging and you think about the destination, you are going to get tired early. But if you just close your eyes and you are just jogging, thinking about how you like just jogging, you will get to your destination without even realizing it. So it's the same thing to anyone who wants to be successful. Don't think about the money, the money, the money. Think about how to what doing the right thing. If you think about how to do the right thing, you are automatically going to be successful in life. That is how it goes. Yeah, so in trading too, if you are disciplined, you obey by your rules, your system, your strategy that is tested and proven, you are automatically or naturally going to be making money.
Yes, boss. Thank you very much.
You're welcome.
Please, I want to know which strategy is best for a beginner.
does your question
I've
does
noticed
nothing like
the
a strategy for a beginner? If you are
okay,
learning, learn the right way. There's nothing like a strategy for a beginner.
okay,
The strategy is for you to be able to read price, for you to be able to know, trying to predict the right way of where price is going to be heading to. Not There's no strategy for beginners. There's no strategies for pro
okay.
traders. Okay. The
Because
beginner strategy is what you are going to carry with you when you advance. It is the same thing. So the best way is to learn how to read price.
okay, okay. All right. All right. Thank you very much.
You are welcome. So someone is saying, uh, please, can a gap hit your stop loss and
Rabi,
take you out of a trade whilst it should have been your favor? Can a gap hit your stop loss and take you out of a trade? Well, so when it comes to trading, there's nothing like 100% accuracy in your system. Okay, so me that I'm making a lot of noise, I can't guarantee you that my system, if I give you a trade signal, I don't have power that the trade is going to go in my favor. What I have power over is what my what do you call my track record or the history of the pattern. So the beginners who are having this mindset of like every trade has to go in my favor, this has to go in my favor, does not trading. Understand this and just be free with yourself. Trading is a probability. You get it. So there's nothing like this one. There's no way this one will go against me. There's no way this one. That's why we manage risks. You get it. So please, a gap hits your stop loss and take you out of a trade. While it shouldn't have been, it should have been in your favor. There was nothing like that. So that's why you need to manage your risks. It can go with my system. If I teach you, oh, maybe last Friday I was expecting price to move up. It's moved up, but it could have also moved down. You get it. So that's why I don't risk the whole of my account on this, assuming that price is going to move up. There was nothing like that. So manage risks. That is the most important thing. If the moment you input a trade, don't have that mindset like, oh, this trade should definitely go in my favor, this trade should definitely, nah. That's when sometimes when it starts pulling back on you, you start panicking and those start. As a trader, have a probability mindset, have win or lose mindset. You get it. The only thing, as I've said earlier, the only thing that is going to make you be in the game for long is your risk management. You don't risk the whole of your account on this thing. I was having one student when he started fresh with me, and those time when I see I'm risking this amount, this guy was not getting me. And later he told me that, okay, I've now understood why you talk about risk management. You get it. So there's nothing like, oh, maybe because I've given you a signal, I'm having a lot of experience in the market. The best trader, the best guru that you know on the internet, they don't know where price is going to go. We trade or we share our experience. Okay. I have a track record that proves that when this thing happen, it can move. I can give you more evidence. So I'm trading based on the history I'm having. That doesn't mean I'm the one who control price, where price is going to go. So anytime I enter a trade, even I'm having like 8 years, I'm having 6 years, 7 years experience, I still manage trade. You get it? I still manage the trade. So have the probability mindset. Don't have that mindset of it should go in your favor definitely. With that one, you are going to get worried and frustrated a lot of time. That's why a lot of traders get worried. So you can see sometimes you can see I don't know the number of traders you are following. Someone can lose $400,000 and the person is still going to live normal. The person is going to be okay. And you don't understand because the person already understand what he is doing. He understand the industry he's in. Okay, as a trader, you need to understand the industry. So a lot of people don't understand the psychology. When you talk about psychology, they don't understand. They thought you have to be alpha male. Nah. Trading psychology means having the probability mindset, the probability mindset that it can be a win, it can be a loss, and if it goes in your favor, you feel me. If I win a trade, I feel normal. If I lose a trade, I feel the same because I know that there was a next trade I have to take the following day. So if I lose, I'm not going to let that loss dominate my life, me being sad and those things. What I'll do is what? I'll just find out why did I lose the trade. If I'm able to find the reason I lost the trade, I will just implement it in my strategy. I will make sure I'm not going to repeat what I did that made me the loss. If I win the trade, I'll just analyze it again and make sure I'm going to repeat the same process again. I will move on because I know that there's no way I'm going to give up on this thing. This is what I'm going to be doing. So I don't have to allow one loss to break me. You get it? So as a beginner, don't have that mindset of everything. This trade definitely should be in your favor. This definitely, but that doesn't mean you have to be doing the wrong thing too because you think, oh, it's normal to be having a loss. Sometimes if you are losing a lot, it might be coming from your system or your strategy. You get it? If you are losing a lot, it might be coming from your system. So if you lose it, so the reason how I became good at trading, okay, is because I was going back my trades again. A lot of people don't do those things. They thought like trading is just like trading is just a normal thing. You come, you take trade, you don't, you need to journal. You have something called journaling. You need to keep track of your trades. That is how you are going to be good at trading. Okay, so in business, you make sure you keep track wherever your customers are coming from, what you did for people to be buying from you, what you did for a customer to come back again and bought from you. Okay, you need to make sure you are analyzing those process. Okay, so as a freshman, when you are starting a fresh month like this, you need to what? Reanalyze what you did last month and make sure the wrongdoings you are not repeating them this month again. You are going to repeat the good doings, what you did that brought you more money. You are going to repeat the same process again. So that is what you need to be doing. It's the same thing. Trading is the same as what we do in our daily lives. So you need to make sure you are what? Keeping track of your trade. You need to make sure you are learn trading. You learn, okay, we learn. You don't just take trade and when the trade moves against us or in our favor, then we just leave it like that. You are not going to be good when you keep on doing those things. You are not going to be doing that. And as you are starting fresh month, if you are going to follow what I'm saying, as in keeping track of your trades, journaling your trades, making sure you are not doing random things, and if you lose a trade, going back and asking yourself question, why did you lose that trade? I bet you, giving yourself 2 months, you are going to be a guru in this game. If you keep on asking yourself why you lose a trade, I bet you are going to be guru at what you do. So me, most of the things that I know, most of, like as I've said, I became good at trading because I was not letting my losses slide. I was going back my losses. Why I lost that trade. Sometimes it might not be my strategy. It might be the timing I'm trading. So I found out. I found out a lot of things in trading based on reanalyzing my trades, asking myself questions. I noticed so these things, especially last year, I discovered with this guy about the I used to be trading maybe 5 a.m. I discovered that most of the times before the active market session, if you trade like 2 hours before active market session, when you get to 1 hour to active market session, mostly if the market is trending up, it mostly starts retracing. How did I know that? I discovered those things by my losses. I noticed that, oh, okay, most of the times my losses are coming from that time. So I stopped doing those things. And just recently, I noticed that currencies on Mondays are kind of what? Very tricky, especially the lending session on Mondays when you are trading currency. It's kind of very tricky. Why did I got to understand that? I got to understand that by what? Going back my losses. I will take the same trade that have been giving me wins on Monday mornings and I will lose. You get it? I will lose, and I wasn't getting it. So when I started when I started as in going back my trades that I've noticed, I noticed that most of my losses were coming from, especially on currencies. Okay, you have to understand, gold is different from currency. On currencies, most of my losses are coming from Monday mornings. No one taught me because of my losses. Okay, so those who just get discouraged, give up in trading because of their losses, you are just, you don't need it, or you don't want the skill. Okay, so you need to go back your losing trades, reanalyze. That's when you start knowing the time frames that works best for you. Lower time frames are not giving you more wins. Higher time frames are rather giving you more wins. So no one told me I should focus on what? The higher time frame. I discovered it by what? My wins and losses, going back my trades. You get it? So that's how you learn. We trading, we grow with time. You don't become good at trading just a month, just 2 months. You got it. When you keep on doing it every day, that is when the skills start coming. That's when you start seeing, oh, okay, now I can make money. Now I can withdraw money. You get it? It comes with time. But a lot of people come into this game with a mindset of I just have to be rich quick. There's nothing like get rich quick. If it is easy, everyone will be rich. There's not if someone is preaching to you, this one is going to get rich quick, this one is going to, so if you buy my trying to join my train, I always tell you trading is not easy. I always tell people trading is, so if you are coming into the game with not the acquisition of getting the skill, but just because you want to get it quick and just quit your work is stressing you, so you think trading is going to help you quit your job and those things, you are getting it wrong, because trading is going to take you some time to master. Okay, so the earlier the better. If you delay, you are delaying your success in trading. So if you start early, you trade small accounts, demo small accounts, then you are learning one or two things with time. I didn't start like this. So sometimes last time I got a message, someone was saying, I want to be like you. So I was just going through my Instagram today, and 2020 I tested someone that I want to be like you. I was just laughing. I was just laughing. I tested someone, the person is in US. I told him, I want to be like you, because of how the person was teaching trading, how he was interpreting the chat. I tested him on Instagram and he didn't even respond. He said, I want to be like you. I told you I want to be like you. And just last week, someone was also saying, I want to be like you. You get it? So when you be in the game for long, you start to gather experience. So start small so that you are not going to be you don't get attached, because wherever your money is, that's where your heart is. So the moment you put in more money, this trading thing, and you don't understand, that is when you start what? Being attached. You get emotional. But if you start small with the goal or with the purpose of getting the skill, that is when you have that mindset of growing as a trader, having the skill, because you've seen someone buying Lamborghini on the internet, so you thought it was easy. Let them lie you, it is not easy, please. So try to learn the skill. All right, so is anyone having a question again? So someone is saying, which of the following, please, hi, please, to clarify more about how to identify. Okay, I've talked about this.
Hello, sir.
Yes, sir.
My problem has to do with the trend line.
Okay, I'm coming. Yeah, so someone is saying, how can I put a good stop loss? Yeah, so when it comes to stop loss, it depends on the condition of the market. You get it. Stop loss depends on, there's nothing like, I can't tell you, oh, you need to use 10 pips for every trade you are going to be taking. You need to be using 15 pips. A lot of gurus with a lot of followers on the internet I've been preaching about. You have to be using 10 pips with my, if you join my signal group, you use 10 pips. That is a lie. You get it. If a trader tells you I use 10 pips, that person doesn't know what you doing. With trading, there's nothing like I use this specific. It depends. Sometimes one currency pair, especially maybe if we're trading GBP USD, sometimes it can give you, the pip range is not going to be very wide. The pip value is not going to be huge. At certain time, based on the market condition and based on what maybe the lack of this thing volume or liquid in the market, the pip value is going to be very huge. Okay, you need huge, or maybe volatility. When there's volatility, especially news events, for instance, the pip value, okay, to be used as your stop loss is going to be very huge. So it depends on the condition of the market. When it comes to stop loss, it depends on the condition of the market. Okay, so when I'm using stop loss, what I do is what I place my stop loss below what? A stronger area of interest. Okay, I don't place my stop loss at any level. That's why, so those times my stop loss usually used to be hit a lot. But when I discovered these things, I've kind of like, those things have not been happening to me again, unless sometimes it's kind of, it doesn't happen more often. Okay, so when it's, you see the red line, the lines that you are seeing on my screen, those, if I'm taking a sell, I mostly place my stop loss below those level. If I'm taking a buy, I place my stop loss below those level. If I'm taking a sell, I place my stop loss above those levels. So I don't randomly place my stop loss at any level. I have to place my stop loss at a level that is going to be very difficult for price to come and take me. Okay, so with the time frames that I use the higher time frame levels. With lower time frame, if you are using lower time frame like M30, M15 time frames levels, you can easily get hit. So the reason your stop loss gets hit more often is because of the lower time frame. If you are using market structure at the 1 minute time frame, because there was a structure at the 1 minute time frame, let me show you this thing. Because there was a structure at the 1 minute time frame, so you place your stop loss above here at a structure level, saying, oh, maybe you want to take a sell, you can easily what? Price can easily get you out from the market, and what? It will continue in your direction. So I always advise, don't use what? The lower time frame levels as your stop loss. Use higher time frame. With higher time frames, it takes time for price to what? Break those levels. You get it? So stop loss varies based on the market condition, based on the structure. Please, I'm talking and you're also trying to. Why don't you wait for me to finish? So stop loss varies, or stop loss is based on what? Stop loss setting is based on the condition of the market. You get it? Stop loss is based on the condition of the market and the structure. Okay, so me sometimes I use candle, but most often if I'm setting stop loss, I have to make sure my stop loss is if I'm taking a buy, my stop loss should be below a stronger area of interest or below a reactional level. So those who have attended my training knows reactional level. My stop loss should be below a reactional level. If I'm taking a sell, my stop loss should be above a reactional levels. So if you join the training, I'll show you how to set stop loss. So please, how can I join your mentorship? So I said I don't do mentorship. My own is training. Okay, I have that time. So a lot of people are not going to be having that time. But for now, I have that time. So this month, ushering into this month, you are going to be having on 15th. You are going to be having July training, so you can join. So please, how do you determine the area of interest? How do you place your stop loss? Yeah. So when it comes to the area of interest, you have to know how to identify the support and resistance levels. You get it? Those area of interest are the same as what? My support and resistance. So these lines that you see on my chart, it's not random line. Okay, it is well calculated. It is not random lines. It is well calculated. You get it? So you need to I can't show you how to draw them, and it takes time for you to understand how I draw them. So if you want to master them, you can just check my YouTube live streamings, the ones that I've been doing over there, because anytime I do live
Mr.
streaming,
Paul,
I've been doing
you can pick up on
I've been plotting those levels, so you can check it out over there. Yeah, so someone is saying, please, what times to trade and what are the times to trade and what to trade? Yeah, so when it comes to the times to trade, we have active market sessions. You get it? You have active market sessions. So when it comes to the forex market, you don't randomly wake up any time of the day, because the forex market opens 24 hours a day, 5 days within a week. So any time of the week, you can just wake up and trade. That is not so. Those who in my mentorship group, sometimes I will just send some nice opportunity and I will tell them the timing is very bad. So timing is very, very important when it comes to trading. You don't just, and sometimes it will play out, but at long run, you are not going to be profitable trading at any random time. You need to make sure you are trading at a time where we have a lot of participants in the market. So the market is like the normal market we see, as in our local market we see. Okay, so if you're in Accra, if you go to Mokola, by this time, the people who are going to see at Mokola are not going to be the same as when you go to Mokola at 1 p.m. early morning, maybe 7 a.m. You get it? It's the same thing when it comes to trading. So trading too, we have sometimes that's what we have a lot of participants. It's because in trading, what you are doing is if you take a buy, you want to easily get a counterparty who is going to take the other side of your trade. That means a sell. Okay, so if the market is dry, the brokers are going to struggle to get someone to take the opposite side of your trade. So that is when you start the trade, it becomes very difficult. So at that time, especially, spread is going to be very high, because brokers are going to struggle to get a counterparty for you to take the opposite side of your trade, because anything that you are doing, the opposite is what we need someone who is going to someone who is going to execute the opposite of what you are doing. So if I'm taking a buy on GBP card, if I'm buying GBP card, I have to get someone who is going to sell the card to me. So if your brokers are struggling to get someone to sell the to sell the card to you, it becomes very expensive to perform or to execute that transaction. Okay, so it's the same thing when it comes to the chart. With the chart tool, it becomes very difficult for price to move. It becomes very difficult. That is when sometimes a lot of fake out. When you don't have a lot of volume, that's when you start seeing a lot of fake out, because those major market participants are not active at that time. So you start seeing what a lot of fake out. Those trading the $10, those trading the $15 are going to dominate in the market. That's when you start seeing shit in the market. Price will be consolidating. So you enter a trade and price will take like 2 hours before you execute. You want to, as a trader, as a day trader, you want to see your results very fast. So that's why some people don't even like trading currencies. They like trading the volatile instruments or assets like gold. They like trading oil. They like trading the indices because it moves very fast. You get people hate trading currency because they see it to be very slow. You get it. So as a trader, you want to be trading at a time where it is easily for your what, for the trade, for you to see your results. Let me put it that way. For you to see your, if you are going to lose, you want to see it very fast. If you are going to win, you want to see it very fast. So entering at a time where it is going to be very hard for you to, for the trade to move, with that you are going to lose, because sometimes it makes it very difficult for price to move in your favor. So the times to trade is what, the active market session. So the lending set, these are the three major market sessions: the lending, the New York, and the Asian session. It starts from Asia, it will move to lending, then it will come to New York, then it's what, it will roll over again, start again from Asia, lending, New York, roll over again. You get it? So me, for instance, so you have to test. You don't have to just be taking anything that I'm telling you just for. You have to make sure you are practicing or testing it yourself. So for me, I've tested the Asian session before. Those times I used to wake up, because when I started trading, I was in school then, so I was not sleeping early. So I used to be trading the Asian session. I used to be trading the Asian session a lot. And one thing I noticed is that the market doesn't move a lot during the Asian session. So with time, I stopped trading the Asian session, tested the lending session, noticed that the lending session I mostly get wins during the lend. So it got to some time I wasn't even trading the New York session, because most of my wins were coming from what, the lending session. So let me give you clues to those who are having a day work, a day job. If you want to trade, especially for, okay, so if I'm in Ghana, for instance, if you want to trade, it is easy. You can be a trader, active, watching the market actively. Start trading the lending session, because most of the wins, every trader will tell you. I don't know. Some people with those, especially those trading indices, will say the New York session. But if you trade currencies, the best time to get winning trades are the lending session. So from 6 a.m. to 9 a.m., focus on that time. Have a work doing, so that it will not bring stress on you. That's what I did. I was having a day job. So what I did is what, I was focusing on the lending session, because most of the work starts maybe after 9 a.m. That's when most of the work starts. So if you are in Ghana, for instance, you can start focusing on the lending session. You can be trading 6 a.m. You just start preparing, checking your chart and those things. By 8 a.m., 8:30, don't check the chart. Just go and do whatever you are doing, your day job and those stuffs. Okay. And I'll bet you are still going to be what? Be understanding the market. You get, so the times to trade, the lending session which starts, I mostly focus on it 6 a.m. to 9 a.m. And the New York session, we have pre-market session. So you don't just go to the workplace and you start immediately. You prepare. So the preparation is the pre simply means what, preparation times towards the active market session. So you can start the preparation time and hour toward the active market session. So 6 a.m. to 9 a.m., that's the New York session, AM GMT. Okay. And when it comes to the New York, the preparation time starts 11 a.m. to what, maybe 3 to 4 p.m. GMT. Then the market starts making the. So how much for the July class? So I said I would talk about it. So just stay in tune. Say please, how do you determine the area of interest? I've talked about this one. So what if I lose all the money in my account? Am I going to pay back their money? So you still don't understand. I don't think you. So have you joined my training before? Or some people don't just even they don't read. If you lose all the money in my account, am I going to pay back their money? Which people's money? Is it the prof firm? Is it the prof firm you are talking about? So prof firm, if you can't lose, so they have a limit. You have a limit you can trade. You can't lose all the accounts. So 10% they will violate your accounts. That means you can't trade with them. Difference between prop firms and brokers. Yeah, so brokers are kind of with brokers, they are intermediate. Okay, so they stand in between you and the counterparty, trying to search a counterparty for you. Okay, with prop firm, you need to find it with your rare cash. But when it comes to proprietary firms, so they are companies, proprietary firms are companies that fund skillful traders, that fund what profitable traders, that fund traders who knows or understands what they are doing. Brokers are intermediate. They give you a lot of things that brokers does for you. So they give you the prices you are going to be trading, they give you counterparty, they give you platform to trade. You get it. So those are these things. So how do you determine your area of interest? I've talked about it. What is the section to trade? I've talked about. So what are some of the mistakes beginner makes most of it? Yeah, so mistake, if I'm starting all over again, one thing I will fight for is what? A system. A lot of beginners comes into the market, they don't focus on one particular thing. Okay, so they do a lot of things at one particular time. So with that, it's going to prolong your journey. If you do a lot of things, if you have a mentor and your mentor is saying focus on H4 time frame, please do that. Then unless you've gotten experience, you've tested it for 6 months, and that particular thing that your mentor told you is working, then you stop. But some people want to make more money than the person who even introduced them to trading, so they'll start flipping to lower time frames, and when they start losing, so you need to make sure what you are sticking to one particular thing. That are some of the mistakes. And if you are starting out as a beginner, one thing I would advise you to be doing is what? Have a system before you even start funding your account. The moment you start doing random things, I bet you sometimes you'll be winning. With trading, I can even fund I can even find a 5-year old and tell him buy and sell. He's going to, at a certain point, he's going to be winning some trade. But when it comes to long term, is the person will the person be able to make money? That is the most important thing. So if you start out trading, your 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 this thing, your goal should be doing something that is going to generate you money long term. That is the most important thing. Don't think about that has been my focus as I started life, being independent, trying to do my own thing. So if you start trading, try to what? Try to have a system that is sustainable. Don't be doing random things are not going to take you far in life. Try to have a sustainable system. This system is tested and proven. And with my system that I trade, my students who are applying it religiously can attest. If some are here, they can just call me out and tell me I'm lying. With me in my mentorship group, sometimes I'll post trade and it will play out like I know I'm a market maker. I'm not bragging, but I know what I'm doing, okay? Because I fought for sustainability. So if you don't fight for something that is going to generate you money long term, you are going to be in the game for a very long time and you are still not going to find your feet in the market. Okay, so trading is not a random thing. Every trader you admire on the internet is having a specific thing that he follows, and he has tested and proven records that is backing it. So if you don't have something of that sort as a beginner, that should be your goal. So after getting the strategy, then you think about how to manage your risks. Okay, but you have to be doing those things they all bouquet of the strategy. So thinking about your risk management and having that probability mindset too as a trader. So I noticed some traders use price action, patterns, head and shoulders, cap cap and handle, demand and supply, break of structure, fair value gap, just to confuse. Do you have to know all these styles before going to the market? Nah, you don't have to be knowing all this. So let me tell you, this head and shoulder is simply the same thing as when price has changed direction, but people have just called it. So it's the same thing as this head and shoulder that people call it is the same thing. Maybe if price is trending up, Okay, if price is trending, the moment it change structure, pull back, continuation is the head and shoulder they are talking about. So as I'm saying, that's why it's very important. You need to follow one person. This is the head and shoulder, head, shoulder, head. Okay, or maybe the head and shoulder, head. Is it shoulder, head, shoulder? You get it. It's the same thing as the head and shoulder people have just. And you see, this demand and supply break of structure. So break of structure is the same thing as the head and shoulder, as I've explained it over here. The fair value gap is the same thing as the support and resistances. Forget about those people. The psychological levels is the same thing as support and resistances. The Fibonacci levels is the same thing as support. Just know how to identify them. The psychological levels are the same thing as support and resistance level, the demand and supply. So if supply, support and resistance, support form because there was a lot of demand. It is the same thing. The reason why there's resistance level over here, because you have a lot of supply. Okay, when price is high, that means what? Those who bought at the lowest price are trying to what? Sell. So sellers, a lot of sellers is the same thing as a lot of suppliers. You get it? Demand is the same thing as, so the reason why there was a support over here, because you have a lot of demand. And the reason why you have a lot of demand is because price is low. And if price is low, that's when a lot of people start. So a lot of people, especially if you're in Ghana, for instance, a lot of people are now buying items. People are now buying the things that they hold on hold on not to buy, because now what, the exchange rate is kind of what is favoring them. Okay, so the reason why there are a lot of demand over here, a lot of supply is demand over here, because price is low, and when price is low, a lot of people will come in and buy it. So demand and supplies, the fair value gap, they are all support and resistance. The fair value gap, I think, is like when maybe there was no support and resistance at a particular level. Okay, so if I'm kind of, maybe if there was no support and resistance, maybe this one, for instance, this is a fair value gap, because you have, there was no support and resistance over here, so a clean zone, price can move freely. So some of them are the same, but people have just used a lot of grammar to represent that. So sometimes I pity the beginners, because this trading space is kind of confusing, especially if you are coming in fresh. A lot of confusing stuff which represent the same thing. Okay, so just to confuse, yeah. So most of them are the same thing that is being portrayed or presented over there. So know which one, which person you are working, learning from.
Thank you for the answer. Thank you very much.
So with small time frame, there was a lot of noise in the market. How can I trade exact ones? Yeah, so the so the industry standard time frames. Okay, we have a lot of time frame, but the industry, you need to follow the trend. Okay, the majority. So the industry's time frame every trader is using is the monthly. Most traders are using, especially if I don't see some, not all, at least you see majority of them in this one. So these are the industry time frame: the monthly, the weekly, the daily. These are the industry time frames. So the H4, which is represented by, which is the 4 hour time frame, the H4, the H1, these are the industry time frame, the 30 minutes, the M15, the M5. These are the time frames a lot of traders use. So the lower time frames that I'm talking about is, so the lower time frame, but it depends on the type of trader you are. The lower time frame is this one. Okay, the lower time frame is this one's lower time frames. So TF means time frames, and the higher time frames. So someone will say H1, but H1 it depends. It's kind of in between. So these are the higher time frames that when traders are talking about. These are the higher time frames. You get it? These are the higher time frames traders talk about. So when it comes to analysis, you need to analyze from the higher time frame, which is going to be your focus time frame. Then you come to the lower time frame, which is going to be what, your smaller time frame. So these are the time frames. So the smaller time frames are this one. So you can just make your decision based on that. So boss, please, I want to know the reason why when they give you signals to enter trade, but when you enter goes you, but the other person is on profit. But please, I want to know the reason why when they give you signal to enter trade, but when you enter, it goes it goes what you, but the other person is on profit. Please kindly explain it to her. I don't understand. Please, how are you going to know there are lots of participants in a particular market? So you are going to know based on what? The movement in the candle. Okay, if you see big candles, that means what? We have a lot of participants. Okay, the market is liquid at this time. There are a lot of participants in the market. Okay, that is when you are going to know based on the size of the candle. If you see big candles, okay, a lot of participants. So markets move very fast. You don't pay a lot to execute a trade. Your brokers are not going to charge you a lot because a lot of participants, you can easily get a counterparty to take the opposite side of your trade, or maybe the various active market sessions. So please, which of your YouTube videos talks about area of interest? Thank you. I don't sure I have a video of that. So what time is the Asian session, learning session? So I've already talked about it. Help me explain about types of liquidity in the markets. Types of liquidity. I don't use liquidity. Liquidity, types of liquidity. I don't know. Good evening. Okay. Yeah, is anyone having a question? I think our time is up. Is anyone having a question? Yeah, so July training will be coming off. So if you want to join the training, you prepare. So 15th, you start. Okay. So the current one is still ongoing, and people have started making profits. People are kind of getting value. So mostly the training looks like this one. I'll be having time for you if you have any question, because I'm not saying I'm totally perfect when it comes to like I know everything, but I've been in the game for long. I know the ins and outs about most of the things, you get it. So I, if I'm teaching you, and what the beautiful thing is, what I'm teaching, people are applying it and it's working. Okay, if I have someone over here who can prove me wrong that what I told him is not, if he's applying it religiously and it's not working for him, he can just come out and tell me. I know you have a lot of people over here who have tested my training before. So please, I want to know the reason if you place a trade and the trend line sometimes move above a little bit. Please kindly take your time and write, because I'm not in your mind. I, reason if you place a trade and the trend line sometimes move above a little. Trend line moves above a little bit. Your sentence is not complete. A little bit. Yeah, I don't really understand what you are trying to say. I want to know the reason if you place a trend line. Okay, the reason if you place a trend line and the trend lines moves a bit, it goes on the person's preference. It goes to, but the other person is, hey, yeah, so sometimes moves above a little bit. Yeah, so with trend line, when you are drawing your trend line, you need to first of all get your point A and point B, and it should follow. Okay, so it should follow. So if the third touch is kind of not doing this thing, is breaking, then maybe you need to ignore the trend line. Okay, so let's say maybe if you have to first of all get your point A and point B. So at this point, this will be my point A and this will be my point B. Okay, so trend lines, I use the wicks. So this will be my point A, point B. So the rest, what I'm now waiting for is what? Waiting for price to come back and touch this one. So if it breaks, okay, if it breaks, this is a different story. Okay, sometimes it will not come to this level exactly. So you have to move this one and start again. This will be your another point A. You don't just have to, because this one that hasn't touched this one, you just bring it over here. You are getting it wrong. So you need to move it. It should be like, it should follow. Okay, so this is going to be point A and this will be your what? Your point B. You get it? This will be your point B. So if this one to maybe the next one decide to maybe just hang, you need to bring it point A, point B. This is how your trend line is going to. So it should follow. You don't have to just bring it over. You start point A over here, then you just try to just forge things to just this one to align. That is not how you get your accurate levels. Yeah, so please, I want to know the reason why they give signals to enter trade. But when you enter, it goes you, but the other person is chairman. I'm not getting it. But when you enter, if you are here, please can you talk? Can you explain what you are trying to mean? Investor, please explain what you are trying to mean because I don't get it. But please, different
Hello,
between
boss.
profit. Yes, sir.
Please, boss, thank you very much for your training. I've been following you and it really helped me a lot. But the thing I want to understand is that each time you're on somebody like you press the signal right now, and by the time you enter the signal, set your take profits and enter the market price and all that, before you notice it, you see that the market is going against you. Why the person who said the signal is on profit? I don't know the reason, sir.
Yeah, so one thing I always advise is what? Sometimes when it comes to the signals, the person takes it earlier before you. You get because price, day trading, price move very fast. So the person thinks about himself or herself before he will be thinking about you. So sometimes you enter the trade before you will send the signal out. So a lot of people even don't check the price the person is even trying to tell you. You get the price is giving or quoting. So me, if I'm sending signal out and the trade, because sometimes we take impulsive moves when price is moving, when the train is moving, then we try to enter. So sometimes it's a lot of work trying to send signal out, unless maybe you are a string trader and that stuff, trying to send signal out and at the same time taking your own trade. It's kind of it's a, especially the scalpers, for instance, I imagine how they mostly do it. It's a lot of work. You get it. So the reason why sometimes the person will be in profit and you will be in loss, sometimes the person will enter earlier before you. You get it. And sometimes to the
Ah,
accounts the person is using, some of them are using commission accounts and you are using standard accounts. With standard account, the spread is high. So before you enter the trade, your brokers are going to take out their spread. So maybe I've given you some of the minor pairs, for example, the spread is kind of very high. So some of them can give you like 4 pips on a bad day. It can give you a commission or spread is going to be like 4 pips. So if I've told you, maybe if I've told you sell GBP card at this current market price, don't expect your brokers to get your order filled at this market price. They are going to take their 4 pips. So let's measure 4 pips. So this is 4 pips. So this is where your trade is going to be executed or your order is going to be filled. You get it? But meanwhile, maybe the person who gave out the signal is using a commission account. With the commission account, there was no spread. You get it? But with that one, before you get the account, it's kind of very expensive. You need to have like $500. I think is it 500? It depends on the broker. You need to get like $500 in your account or so. You get it. So you that you're having $10, you can't get the commission account. So for him, the moment he entered the trade, he's in profit. No spread. You get it. It's commission. So they deduct him monitoring wise. Okay, not spread. But you that you are using commission account, now that your brokers are going to take their spread. So when you enter the trade, you are still in loss unless maybe it covers its price move 4 pips in your favor before you'll be in profit. You get it. So these are some of the conditions. As I'm saying, sometimes spread, sometimes to the what do you call it? The person enters the trade before you. You get it, or maybe you didn't see it earlier. So you need to anytime a signal is given, check the price. A lot of people don't do that. So be if you to my beginners, please don't rushing to make money. You are still going to be broke. You get it. So if you're a beginner, don't rush. Understand the thing. Okay. A lot of people don't check the price or maybe buy GBP card at 1.87. Someone might see the message like 15 minutes time. When the person come, he is not going to check the price the signal was given and he will just enter. Meanwhile, maybe price has either maybe started moving against him or maybe price has already moved and the person will enter. You get it? So anytime a signal is given, check if price is close to the price that the person told you to buy or sell before you execute the signal. Yeah, so Steve raised up his hand. So I've gone beyond the time. I decided to be doing it 1 hour. Yeah, I hope you've gotten a lot of value, and I'll try and post it on YouTube so you can check it out over there. I've recorded it, so maybe I'll try and post it over there. Any question? Last question, then we leave.
The next
Steve,
one.
you can talk. Okay. Any question? All right. So if there was no
Hello,
question, yes, sir.
hello. Please, can you tell me the difference between the prop firms and the brokers?
Oh, I've already spoken about it. I said
Yes, uh-huh.
prop firms are company that fund skilled traders.
Okay,
Prop firms are companies that fund skilled traders, and brokers are like they are intermediate between you and the market. So mostly, uh, if they give you prices, they find a counterparty for you to take the opposite side of your trade. But there are a lot that goes into profit brokers. But if you want to talk about it today, we are not going to finish
yeah,
because
I understand.
these current brokers you are seeing them are not brokers we see. They are they are our counterparty. They are taking the opposite side of the trade. If you understand, you understand. You get it.
I
The
get
thing is,
it.
what I'm trying to say is what when you execute, they give us the platform for us to be able to what trade the forex. If not the advent of brokers, we the retail traders, it would have been very hard for you to participate because it's going to trading get trading in the forex market or the sports market demands a huge capital. But with the advent of traders, through the leverage they are giving to us, they've given us what they've given us the leverage to be able to also participate in the forex market. You get it? Yeah, but
Okay,
with these brokers, they take the opposite side of the trade. They know they don't send our
okay,
orders to the market straight. So these pro firms too, they are not pro firms. Okay, they are giving you demo account to trade. That is the fact. They give you demo account,
okay.
so it's like pay Peter to pay Paul.
Paul.
So
Mhm.
the more this thing traders lose, the more they get money to what fund the pay for those who the skill the those who win trades or those who pass
Okay,
their challenges.
okay, I get it.
Okay,
Thank you.
please can you list the other two professions? Come on, pass on. Yeah, so you can use funding pips or funded nest. Okay, so I've done a lot. So, yeah, so those who want to join the July training, kindly prepare for that. July 15th, yeah, starting. So, financially prepare towards that. So, when it starts, then you join. Okay. All right. So, see you all same time. Maybe next time. Okay. So, what's the best and secure platform for forex trading? How long will the training last? So, 15 days, and you will be part of my mentorship group. Okay, please can you list the other? Okay. Yeah, so see you guys same time next time. Maybe in 2 weeks' time we will meet again. All right, bye bye. So if you have not subscribed to my YouTube channel, kindly go and subscribe because I try to drop some nuggets over there, so you can be catching up. Or if you have not joined the Telegram channel too, try and join the Telegram channels because I mostly post some trade ideas. You can be using it to make your decision too as well. All right, so see you next time. Bye.